We talked about at the top of the show how their spending on the metaverse is a sore spot with investors. Maybe it's a boon for chip stocks. I mean, that's what Wells Fargo is talking about today. Josh, they say, Meta is expected to be a big Arista Networks customer. You've got NVIDIA, you've got AMD, which makes the CPUs for Meta and Pure Storage, already provides the flash storage for Meta. Should we think of this spending in a reverse way? What's bad for Meta is good for these chip names?
You know, it's an interesting question. I don't think that will turn out to be the case because I think there is a recession happening in tech. It's not everywhere within tech, but this is not an environment where even if companies say they're going full speed ahead, I wouldn't believe them because I just don't think the demand is going to be there. So as consumers have continued to move away from goods and towards services, and that shows no sign of reversing anytime soon, I just don't think you're going to have a great year for growth in the semis, regardless of any one big spending company. So I still think the semis are a good bet here. They are down substantially. I like them as a group. There are some names that are absolute outright buys right now, but as a group, I just think share prices are reflecting a much worse situation, but that doesn't mean all of a sudden, oh, you know what? Meta's going to keep spending. Let's buy more. I wouldn't take it that far. That seems like a step too far.
So, Joe, I mean, you do own AMD and NVIDIA. Well, what do you make of this report? Does it make sense to you?
So it's not just a 5/1/6 thing between Josh and I, but his comments are totally spot on. And I think that overall as a group, even the price performance this week, Scott. So I sat with you for overtime on Tuesday. We heard from Texas Instruments. We saw the decline for both Marvell and onsemi and Texas Instruments, and there was this resiliency the next day. SMH rallies in the wake of that. So I think a lot of negative news is priced in, but I think you have to follow what Adam Parker has told us, where you really have to be stock specific. You have to be highly selective. You have to study where the double ordering is actually occurring. Where is the retention of pricing power in a weakening demand environment? So it's an idiosyncratic decision on which names to own.
All right, and that leads me to Intel. Jenny, in overtime, which maybe we'll hear from you on the backside of the report. How are you feeling going in?
Well, I think it's the kind of thing where, you think that everything is possibly in this stock and in this company and in this sector.
All the bad news.
All the bad news, right? Everything's just terrible. And that's true for the semi space overall. I think there's a bigger story, too, which Josh touched on, which is tech is in recession. And specifically, Amy and I were debating this earlier, are semis in recession? We know PCs are in recession. But if we use this as a microcosm for the broader economy, you could say Intel, Teradyne, AMAT, everything we own, these stocks have been, their earnings have been in recession. And so if the market looks out 6 to 12 months in advance, and if investors do, then perhaps these share prices have already bottomed. Because if you look out past 2023, the earnings start to pick up. So for Intel, you go into the thing saying, please,
is that your
God.
bet? Is that your bet that you think? I mean, I know you're really hoping that they've bottomed, but do you look at Joe's mouth?
I know.
It's just been so bad.
Yeah.
Sorry.
But
it's just been bad.
It's been really bad. But I think the reality is they probably have, because you can now start to see the improvement in their earnings expectations for later in 23. We'll start to see 24, and the share prices are just stupidly cheap.